Good morning. I would like to introduce a Cayman insurance. So, what is a Cayman insurance? It is actually a life insurance policy that a company purchases on the life of an owner, a top executive, or an individual considering with a critical to the business. So basically, the company is the one who's the beneficiary of the policy and the one that pays the premium. So who is the key man? Key man are the owners or executives in a key positions. So they are the expert knowledge of the company process or product. So they also have a unique skills to produce a product. Exclusive relationship to buyers, lenders, financiers, and suppliers. The key persons. What we're offering is a business protection, ensuring the transfer of ownership for the business continuity. So in case of death or disability of the owner, the proceeds of the insurance can be used to purchase the business interests, to pay the debts, the taxes, and the costs for the continuation of business. And also, in case of liquidating the business, this will also cover the losses. As a business owner, our goal was from the gross profit of our business, we are expecting to pay the expenses of the company, including the employees' wages, the operations, the cost of goods, rentals, and other expansions of the business. So, in order for protecting the business, once the owner is no longer able to, we need to allocate at least 10% of the capital or more to fund the future mechanism like business expenses, retirement funds of the employees, estate settlements, and other family expenses, ensuring the continuation of operations in case we're no longer available. Life insurance proceeds can be used to fund in keeping the business running, assurance to the creditors that their loans are safe, special expenses for finding, securing, and training the new employees, losses due to learning curve of the replacements, and of course, undetermined costs or the ghost expenses. We can only purchase a life insurance if there's an insurable interest. In case of business protection, a corporation or a business has an insurable interest in the life of any man or employee associated with the firm whose death would cause it tangible loss. A corporation has an insurable interest in the life of a shareholder who owns a large portion of the corporate stock, whose skills and expertise are critical to the continuity of business successful. So for business protection, the applicant is the business. The premiums should be paid by the applicant or the business. The business will be the owner of the policy, and the key man is the insured. So the business is the beneficiary. So this is just a salary test method or the rule of thumb. So the question is, how much is the keyman insurance? So we can say the coverage of a keyman is equivalent to the 5 times of the annual income. So if a keyman is presently earning 1 million per year or 80,000 per month, then we need to set up an account for a keyman worth 5 million. Sun Life has a wide range of policies and products that we can purchase to cover the business insurance. But in this case, we're going to show an example for term, which is Sun Safer Life, a 5-year term insurance, and an endowment, which has a Sun Startup. This is a sample computation for an annual 5-year term insurance or Sun Safer Life with a face amount of 1 million and an accidental and total disability benefit. So as you could see, this is the cheapest policy that we can provide, which is only 12,000 per year or 30 pesos per day. So even at the age of 40 or 50, it's just an increase of 10,000. So from 12,000, if you're already 50 years old, you have to pay 20,000, and for 60, 32,000. Still, this is the lowest premium for a 1 million insurance policy. In this example, we'll be using a Sun startup or a traditional policy with endowment, which means for a face amount of 200,000, you just have to pay 4,000 per year, and we will have a money back return of premium after 10 years. So that's 50% return of premium in the year of maturity. So if we get a 1 million, that's 22,000 per year. And then after 10 years, we will have a 50% ROP, return of premium, which is equivalent to 100,000. So another product that is very popular is the VUL products of Sun Life, which is including an investment return. So with an annual premium of 22,000, which is equivalent to 1 million insurance, we can have a return of investment at 8% at age 65 of 1.9 million. So that's more than what we had paid for. And if we did not withdraw those returns and waited for another 10 to 20 years, then we'll have an increased value of investment up to 11 million and 23 million at age 100. In the event that we did not withdraw those fund values, all this fund value investment will be included on the death benefit as part of the proceeds. So for business protection, what are the rights of the insured in a Cayman insurance? Actually, the insured has no rights to the policy, but the insured can have a buy and sell agreement or can be pre-arranged. In case in the future the Cayman want to purchase the policy, he can do so. So the company can use the purchase money to buy for a new Cayman insurance, which means the Cayman can own the policy after he or she decided to leave the company. So we have 4 types of model in purchasing the business insurance. First model, which is the common one, is the company is the beneficiary, which means in tax implication, the company cannot deduct this in the tax because the company is the beneficiary. And the insurance proceeds of the death is the employee cannot also subject to income tax or estate tax. But in model 2, whereas the employee's family is the beneficiary but revocable, the company can file income taxes since they are considered employees' benefit. But the employees also have to pay taxes since the insurance proceeds are revocable. So what we have to do is model 3, which we change the employee's family beneficiary into irrevocable. So the company can file an income tax, and the family of the beneficiary does not need to pay any taxes or estate tax in the future after receiving insurance proceeds. And of course, the last and I recommended is the model 4, which is the company and employees' family are the beneficiaries. For this case, the company cannot file the income tax since the company will benefit as a beneficiary, but the insurance proceeds can be designed in such a way the company is reimbursed of its premium and the balance goes to the family. So basically, if the total amount paid from the premiums is 2 million, then 2 million can be reimbursed by the company and the balance will go to the family members as beneficiary. So this is also not subject to any estate tax or income tax. For business insurance, there's a maximum insurance coverage per employee, and they are as follows. For rank and file, it's only the maximum of 1.5 million. Supervisors and managers has a maximum of 3 million. And for executives and officers or the CEOs, the maximum they can cover is only 6 million. So unlike conventional insurance, you can have more than 6 million, but this is very specifically limited for business insurance. Available riders is also available, HIB and CIV. Just we have to submit a waiver form for every entity. So this is a sample computation if we consider the maximum insurance coverage as per the insurance commission. So for a term, SunSafer 5-year term insurance, the rank and file 1.5 million is only 18,000 per month. So this does not have any retirement or withdrawables since this is a term insurance. And as follows for managers and executives. But this also includes a total disability waiver and an accidental death benefit. This is a SunSafer Sun Startup. So it's a traditional insurance with endowment of 50% return of premium at the maturity, which is 10 years. So for an example, for a rank and file of 1.5 million coverage, there's an accidental benefit as well included as riders. It's only 35,000 per year, or after 10 years, we've paid around 355,000. But after 10 years, we can also withdraw 165,000 as our return of premiums. This is the endowment. So for Sun Maxi 100 or a 10-year VUL insurance with investment, so it's an example of rank and file of 1.5 million. So basically 1.5 million can be the maximum of rank and file and can also be applied for managers and executives. So this includes a total disability waiver, accidental death, and a hospital income. So the yearly payment is 42,000, or we can pay it as a monthly pay of 3,500. So as you could see, after 10 years, with total paid is 420,000. At the same time, after 10 years, based on a 10% return, if we decided to withdraw this fund value, it's worth 368,000. So basically, it's almost close to 100% return, or you can withdraw what you had invested. But if in case you did not withdraw this and waited for another 10 years or year 20, it will double to 700,000, and on your retirement, another 10 years, on age 60, it will be 1.5 million. So basically, the investment is increasing when we decide not to withdraw the fund value, because fund value can be withdrawn only once, and you can withdraw like intervals, but once you withdraw, the generating return of investment will be based on the balance that is in the current stock or shares. In this scenario, it is also a VUL or insurance with investment, but I added a CIV or a critical illness benefit, which is doubled of the insurance coverage. So in this case, with just additional of few 2,000 per month or 62,000 per year, so basically you will already have a critical illness benefit. Meaning to say, once you have diagnosed in a hospital or ICU with a critical illness, you can claim this benefit even though you are still in a hospital intensive care. At the same time, this also has a withdrawable retirement at 10%. Assuming after 10 years, we paid 600,000 total, we can also withdraw almost close to that same amount, which is 500,000. But if we delayed it for another 10 years, this fund value can be doubled. So this is a very good alternative if we plan to have a retirement or future value of our investment, of our payment for the insurance. So this is to summarize again the difference of three approach that we're looking for. So initially, what we have provided is individual insurance where we can basically compare this with other companies. It's a 1:1 and it's a insurance for every individual. Group insurance is normally the best selection if we want to have insurance for every employee in the company with a minimal cost. This is only around 250 peso per year, which I can show you later on. And the business insurance, this is insuring the key person of the corporation, and the beneficiary is the business. So this is very applicable for the company whose main focus is the key persons of the company, and the beneficiary is the company itself. As you could see, this is the summary in prices. For individual insurance, of course, this is case to case, but the average monthly expense is around 3,000 per month for every million. This we can be selective. If we want a VUL with insurance and investment, we want to have the cancer care or critical illness, the healthcare products of Sun Life. For business insurance, what we're looking for is arrangement between the corporation and the key members and the family members of the key persons of the corporation. So it is also close to an individual insurance in terms of estimated amount of 3,000 per month for every million. But the difference is there's a limit for a maximum insurance coverage, and the beneficiary should be the company. So basically, it's mainly focused for the company or the business. Group insurance, this is the cheapest, which is 250 peso per month or 3,000 per year. So this is not per month, it's per year. So this is very cheap if we just want to cover the accidental death and disability of every employee. So it's a term insurance. It's a yearly renewable term insurance. There's no medical examination. Everybody can avail this is an on and off job. So whether you're not in the office and you made an accident, you're still covered. Okay, that is all for now. Thank you, and hope you can decide which is the best product that suit your company's needs. Please keep in touch and we'll provide the best we can to suit your best needs. Thank you.